Hey, welcome back to the podcast and thank you for being here. This is a solo episode with yours truly, Lacey. And, last week was a huge milestone for us because it was actually episode 100. So we are coming up on almost 2 years of recording episodes. And guys, we wouldn't be here. Our podcast wouldn't be successful without our listeners. So thank you very much for your continued support. It is a snowy day here on the ranch, and as most everybody is calving right now, so no buses today, which means we have extra hands for cow checks, which is awesome. And so far, so good. Everybody is warm and happy and healthy. But last week was an interesting episode that if you were watching online or you listened, you know that it kind of got me all up in my feels. And I don't always like going there. So, we were talking about the history of money and history of financing in Canada. And, we touched some touch points on the US as well. But how did money function and what was it like before the income tax? What was it like before the stock market became the default place to, build your wealth? But a question that we didn't answer was, where were people actually putting their money before the income tax, that started as the war tax and it was supposed to be temporary? Where were they putting their money before the stock market and the income tax? Because our needs were still the same. Maybe they weren't on the same scale, but as time goes on, things change and we scale, and we're supposed to do that. But we still have the same needs that the folks back then had. And so it wouldn't have mattered what business you were in. You still needed a place to store your capital. You needed access to that money so you could continue doing your business. And you needed to protect your family. And so if they didn't have RSPs and RESPs and TFSAs or market-based retirement accounts per se, then what were they using is kind of what the question. But is it a question that people ask? I think that most people don't even know to ask that question. But here's an interesting fact, mic drop. Before the stock market, they were using whole life insurance because it already was there. So that's super interesting. And then, have you ever heard I know you have, the term, why fix it if it's not broken? And so, why do we do that? Why do we fix things that aren't broken? And so going back, what was whole life insurance used for? It wasn't used for what most people use life insurance for today. It was used as a financial tool, similar to what people are using market accounts for. It was used as a financial tool. It was a place to store their capital where it could grow consistently and predictably. And that's the thing about whole life insurance, or is the contractual guarantees. And I was just listening to a recent podcast of Mary Jo's where she talked about universal life policies and how, of course, we're biased because of the infinite banking concept, but the whole life policies always win because of that contractual guaranteed interest rate of the general fund and the dividend option. People used whole life insurance because it did provide those guarantees. Most importantly, it allowed people to access their money. And so I think that's one of the main things that's been lost, is being able to access your money. I remember sitting in a meeting with Winnie when we were starting out and becoming her clients. It was like, I don't know why this number sticks out to me, but it was 13,000. And 13,000 was the deposit option limit that we could put into one of the policies in a certain year. And I remember thinking, oh my gosh, but we don't have 13,000 extra dollars. But I didn't fully understand the concept and how the policies worked at that moment in time. And that was fine. I remember her explaining it to me and it being very clear that this wasn't extra money that I had to come up with. It wasn't money that I had to be okay with losing if the market crashed. It was money that we were already making. It was money that I was still going to have access to. And it was money that was going to keep working for me forever. And so I remember that $13,000 sticking out for whatever reason. And what's really cool about people using whole life insurance way back so many years ago is they didn't give up control of their money in order to grow it. They still had control of their money, unlike what I was just saying. If we're putting money into the market, we have to be willing to lose it because that is the risk we take. And so, who was actually using whole life policies way back then? Business owners used it, farmers used it, banks used it. I know that's always shocking, but banks are some of the biggest clients of life insurance. The same bank that lends you money to operate your farm hold capital in life insurance. It's a fact. Look it up. They believed in the strategy before the public did. So why are we questioning it now? Is something that I always keep coming back to. And it's okay to question. We should question things. Like if we're not questioning decisions that we're making about our finances, then, that's a huge mistake. If we're not doing that, if we're not questioning and we're not researching and we're not being responsible about where we're putting our money or where we're not putting it, then that's a problem in itself. I like this episode, although I do miss Winnie when she's not on here because I'm so used to conversing back and forth with her. So what changed? If it worked so well, like I said, if it's not broke, why are we fixing it? In the early 1900s, income tax was introduced in both Canada and the US. From that point forward, the conversations that we were having around money changed and it started to shift because it was the stock, and I say this, and Nelson talks about it in Becoming Your Own Banker. The market was the newfound place to build, to store and grow your wealth, was in the market. And so it's not that people stopped believing in whole life insurance. It just, that shift started to come. People started to focus on that tax deferred growth that they could get in the market. What we ultimately moved away from was guarantees. The guarantees that we receive in a dividend paying whole life insurance policy. We moved toward risk. We moved toward speculation, and we moved toward hoping, the hope, pray, wish model. That's what caused us to be in this whole cycle of like questioning infinite banking, or why aren't people doing this? If I have been asked once, I've been asked 100 times, why haven't I heard of this? This is why, because people stopped using it and we started to shift. That's just how it is. We started to shift. Whenever we shift, it doesn't matter what we're shifting in our life, we always give up something. So what did we give up? Or, what did we lose when we shift? When we're talking about finances, what did the shift cost us? It cost us control. 100% it cost us control. Control of our capital. I like to have control of our cattle herd. We have fences. I like to control what bulls they are bred to, what bulls get turned out with the heifers, what bulls get turned out with the older cows. I like to control what they eat. I like to control the herd health. And so if we like to control all of those things, why are we okay with giving up control of our capital? That's a question that we should be asking, because we like to have control of everything else within our operation. If you want to use money today, you have to go and ask for it. I hope you have a good relationship with your banker. And I hope you've been a good business partner, because when you go to apply for that loan, you're always hoping for that favorable response for sure. So we apply for the loans. We wait for their approval. I don't know about you, but I have a little bit of a rebellious side to me. And I don't like being told what to do. So I don't want to wait for the bank's approval. I don't want the anxiety and the, being made to feel vulnerable, waiting for that approval. And I don't want to have to accept their terms. I don't know if you've ever really sat and read through the terms and conditions of a financing agreement. It's not all roses, I'll tell you that much. Have you ever really sat down and read through the terms and agreements? Because here's the thing. Young people are getting into financing agreements and they don't even know what they're agreeing to. And that drives me bonkers, because here's the thing. As a parent, it is my responsibility to teach my kids how to adult. And understanding what they're signing up for is part of that. It drives me bananas that parents are so irresponsible with their own money and their own financing and their own financial education that they pass that on, and these kids are signing up for things that they don't even know what they're signing up for. And it doesn't matter what it is. Is it a student loan? Is it a vehicle? Is it a mortgage? Is it furniture? You name it. A vacuum cleaner? I don't know. The possibilities are endless. But we are made to accept the terms of whatever they are. We see this all the time. It's not only just in life, it's in agriculture too. We've gone from being able to finance our own operations to relying on outside lenders for every major decision. If that doesn't make you want to do something different, it does me. It makes me want to take back the power. Like 100% makes me want to. We went from using our own money to asking permission to use someone else's. Let that sink in. We went from using our own money to asking permission to use someone else's. And if they don't see it fit, if they don't view you as a good business partner, they're not going to sign up with you. Why does this matter? Well, cash flow is one reason why it matters. If you've listened to Mary Jo at all, you know that she says cash flow is king. How are you surviving if you don't have cash flow? Every single one of us needs cash flow. We have debt cycles. We get out of one debt, we sign up for another one. There goes our cash flow again. We have uncertainty in the markets. We're doing real good. Then something happens. Political, maybe, weather, natural disasters. When I check my cash value and my policies, I don't go on there and see a huge negative impact because of the political party that got voted in the day before or whatever it might be. These aren't new problems. It's just a result of moving away from a system that used to be used to solve them. And so the problem isn't new. We're still going to have cash flow pressure. We're still going to have debt cycles if we don't move away from it. We're still going to have uncertainty in the market. We're still going to have drought. We're still going to have disease. We're still going to have political issues that arise. But what has changed is the system and how we proactively deal with all of these things. And so let's tie in infinite banking. You know, when we use a dividend-paying whole life insurance policy as a financial tool today and take the insurance piece out of it, and let's just say, what would it look like if I use this policy as a financial tool? It's not a new idea. It just returns back to the principles that have already worked. You have control of your capital. You have liquidity of your capital, predictability. Infinite banking is about liquidity, control, and guarantees. And if that doesn't tickle your fancy, I don't know what will. And here's the other thing. This strategy wasn't replaced because it failed. It was replaced because something else became more profitable for the system. And think about it this way. If you are find yourself trapped in, as this lady on Instagram says that I follow, if you find yourself trapped in another protein and fiber conversation about how to lose weight, it's because if you're following every trend that the latest and greatest about how is a 40-year-old woman going to lose some weight, you're jumping on too many trains and trying to implement too many systems and changing your mind too often. And that's why nothing's working. Well, it's one reason why nothing's working. That's a whole episode in itself. But it was replaced because something else became more profitable for the system. And who's the system? It didn't disappear because it wasn't working. It was working. Because if you read Nelson Nash's book in the 80s, he found himself on his knees praying for a way out of the financial mess, paying 22% interest on $500,000 in debt. When he got the epiphany, you have everything you need to get out of the mess that you're in. And it was the cash value inside his life insurance policies. So he utilized that cash value. He didn't cancel his policies and get the cash surrender value. That would have been really dumb. He took out a policy loan, and it took him a number of years to move totally away from the bank. But he did it. And it was because the system never stopped working. It was still there. It just needed to be put to work. It disappeared for a lot of people because we stopped being told about it. When the newfound place came to put your money, into the market, it stopped being talked about. We stopped being told about it. That's why you've never heard about it. And I don't know about you, but like I'm into old fashioned. Like, let's get back to the good old days. I miss having a landline. I threaten to throw my cell phone off the river bridge multiple times a week. So the question isn't, does it work? Because it already did. For generations and generations, it worked. The system already worked. The real question is, why did we stop using it? And I have an example pulled up on my other screen. I'm not going to show you, but, let's say a 16-year-old male starts a policy, because in Canada, the age requirement to own a policy is 16. So let's say they own a policy and they pay roughly $3,600 into this policy every year. So they're storing and growing. Part of that is the premium, the cost of the insurance, and part of it is extra money that they're allowed to pay in. So let's just say a 16-year-old pays about $3,600 every year. So they get their summer job. Maybe they have a job throughout school. I don't know. But they can tuck away $3,600 a year and watch it grow in a policy. And meanwhile, it's still liquid to them. So what is that going to look like? 25 years into the policy would mean that they're 41 years old. There is a cash value of $164,000. They've paid a total of $90,700. In this particular policy, because every policy is different, the way we structure it, how the client chooses to proceed once we present ideas and recommendations. But at 41 years old, that death benefit on this policy is over $647,000. There's a cash value of $164,000, just over actually. And so that is starting as a teenager when you get your first job. Maybe mom and dad want to help put some of the money in there. I don't know. The possibilities are endless, but I'm just saying, these policies work when they're structured properly and when you work with an advisor who has been trained in the infinite banking concept, who's authorized by the Nelson Nash Institute. So ask yourself, why did we stop using dividend paying whole life insurance? And what would it look like for me to start using it? How would it impact the generations to come? But then go deeper and ask yourself, what would it change if I started using it? Let that sink in. If you started fully implementing infinite banking into your family and into your operation, what could it change for you? What goals do you have? Where do you want to see yourself in 5 years? We can help you visualize that. So you know where to start. It's always the book, but it's not the end. So many people have gotten the book, but then that's where they end. And that's not where it ends. And you know what? There's no harm. Get the book, read it, listen to it, because you're going to get the audio and the paperback, and then have a complimentary consultation with myself or with Winnie. Let us show you what this could look like for you. And at the end of that session, if you want to move forward, we're happy to help you. But if you say, this isn't for me, that's great. You've marked that off your list. You've learned about it. You've decided it's not for you. Check. You can move on. No hard feelings, no skin off anybody's back. That's what we're here for. And that's what we share this book for. So thank you for listening. Head over to our website, ranchyourway.com. That's where you're going to grab your paperback and audio bundle. Please head over and give us a 5-star review. We would really, really appreciate it. YouTube, you can watch us, Apple, Spotify, and iHeartRadio. So thanks, guys, for tuning in to another episode.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.